Good morning. My name is Rhein Zarghami. I'm counsel in the firm's Stamford office. I've been asked to provide a very brief update on the federal and estate gift tax laws. We have, as a result of the Tax Act that we're now almost 2 years into, 2 calendar years, a very high exemption amount of $11,180 that is indexed for inflation. So this calendar year 2019, the index number is $11,400,000. We have a very limited window with these higher exemptions. So the key takeaway is to see the last number on the slide. At the end of 2025, the law will sunset and we will revert back to 2017 levels. So we have as many as 8 years under this law to use $11+ million per person, or $22 million indexed per couple. For 2020, the index number is $11,580,000 per person. So that's the index number starting in January. The exemption is increasing by $180,000 from this year. As a practical matter, we know that clients can use this entire exemption amount this year or next and not fear a clawback if the exemption is lowered at a later date or sunsets according to the current law. We do not have a crystal ball about whether or not the election next year will result in changes that will affect these exemption amounts earlier than 2026. But we do know that Democrats have historically favored lower exemption amounts. These are very popular items on the agenda, and they're favored typically by the base. As a good advisor, we would like you to draw your client's attention to the fact that these exemption amounts might be for a finite time. The last thing you want is for their neighbor to be bragging about taking advantage of these higher exemptions when it was never brought to their attention that they might not be able to use these exemption amounts later. The issue for Connecticut clients, however, is that the exemption amount is lower in Connecticut than it is on a federal level. So in 2020, we are going to increase to $5.1 million per person, and we go up progressively from there until this law also sunsets at the end of 2025. So if you gift intangible property as a Connecticut domiciliary or real or tangible property located in Connecticut, that property will be subject to gift tax in Connecticut at essentially a 10% rate is like a easy number to remember. If you take advantage of the full federal exemption of $22 million, you will be making a gift in excess of the client's marital $10 million exemption, so you will trigger a tax on that full federal exemption amount. However, out-of-state property is not subject to Connecticut gift tax. So if you have clients with a home in Arizona, for example, that would not be subject to the Connecticut tax, but you could be taking advantage of your federal exemption. For your clients domiciled in New York, the exemption amount is higher. There's no gift tax amount, and the estate tax exemption amount is higher next year until it phases out. There is no gift tax, but for New York clients who die, gifts made within 3 years of death are now going to be brought back into the New York estate. So if you have a client that's close to death, you don't want to suggest to that client to make a gift because it won't be subject to gift tax prior to death, where it would be subject to estate tax because those gifts will be brought in as a result of a law enacted in April of this year. So please tell your clients who are considering large gifts to get in touch with their Cummings and Lockwood lawyer sooner than November 4th, 2020, when we do anticipate a panic if the election moves left. You could be sparing them a great deal of angst in trying to complete a complicated transaction within 8 weeks. Thank you so much.